Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be going over a technical analysis setup that I sent to the CYPRX students ahead of the curve in our private group chat, alongside going over one of the trades that we all place today here in the CYPRX community. If you all enjoy deep technical analysis breakdowns, going over the strategy that we trade here at CYPRX, if you take away something valuable from this, make sure that you smash that thumbs up button and subscribe to the channel. Also, if anybody's interested in our private mentorship group, learning our market analysis in extreme detail, over 60 hours of course material, private mentorship program, you all can click the link in the description underneath of this YouTube video and you all can enroll. If anybody has any questions about the mentorship program, you all can also find our email in the description down below. Reach out to me. I'd love to hop on a Zoom call with you all and schedule a one-on-one. That way you can ask any questions that you might have about enrolling into our mentorship program. With that being said, let's jump in. So first, I want to take your attention over to our private GBP/JPY group chat here in the CYPRX community. You guys can see multiple students across the board posting screenshots of their trade today. We all placed pretty much the exact same trade. Absolutely phenomenal. We see Jamie, we see Asaf, we see Alexis, we see Brandon going on, Eric, Gulo, we see Amir. I mean, this is absolutely phenomenal. All CYPRX students, superior traders, catching the same exact move, entering in the same exact location, which means one of a couple of different things. We had either the same analysis or the trading strategy that we trade here at CYPRX is effective. With that being said, that is what we're going to go over in today's video breakdown, is this specific trade setup that we caught today during New York session. Now, I want to first take your attention, again, giving the students a very transparent overview of my analysis on price action ahead of the curve. You guys can see that on April 17th, 2023, at 1:12 p.m. Pacific Standard Time, I sent the analysis to the students that came into fruition to the T. I said, as of time of writing this message, currently GJ price is at the 166.400. And in my personal opinion, we need to see a bullish sustainable hold above the 166.800 in order for bulls to regain control. My bullish thesis is if we can see bulls overpower sellers and take price firmly above the 166.800 with bullish momentum, we can see price go as high as the 168 to 169. And I sent the students this screenshot right here, as you all can see, giving them specific psych levels that price needs to break with specific notes as to where it could potentially go. And if we go back over here to the charts, you guys can see via this yellow circle, this is where I was telling the students right here at roughly about 1 p.m. Pacific Standard Time during New York session here in California, that if price can hold above this 166.800 psychological level, we should see a push into the 168. And as you guys can see, we had a sustainable bullish hold and break above that 166.800 as per my analysis sent to the students ahead of the curve. And just like how I told the students, we could see a push as high as the 168 come into fruition. You guys can see that that psych level, the 168, came into fruition to the T. Again, sending my analysis to the students ahead of the curve. You guys can see indicated by this yellow circle, that is the exact time, 1:12 p.m., April 17th, that I sent the students my analysis again ahead of the curve. So if you all want access to that, again, you have to be enrolled in our private mentorship program. Now, let's go over the trade that the majority of us here in the CYPRX community caught today. Absolutely phenomenal price action. We're going to start from complete scratch. Now, because we are intraday traders, scalpers here at CYPRX, we like to do our analysis based off of trading in tandem off the hourly and the 15-minute chart. Now, real fast, let's delete this 166.800 psych level. And I just want to show you guys, let's go to the hourly time frame real fast. Another reason why we were catching this trade in this area today was based off the fact that price was discounted from the hourly time frame. If we're looking from the start of the session open down here in this Asia session, this low, all the way up into the high, we can imagine that this is a bullish leg that we're operating inside of. Why? Because looking at this order flow in the market, we can see structure being formed. We see high, higher low, higher high, higher low, consolidation, right? And then a breakout of the consolidation, creating higher lows and higher highs or bullish order flow in the market. So coming into this trading session today, the majority of the CYPRX traders understood, again, being aware of the higher time frame, that we were operating inside of this bullish structural leg on the hourly time frame. So trading in tandem with that order flow, we all knew that as long as we held above this low here, again, that psychological level coming in at roughly around the 166,500 major, if we round that off to the T, you guys can see that as long as price holds above this psychological level right here, we are operating in this bullish leg where price created a higher low, higher high formation on the hourly time frame. So the majority of us here at CYPRX took that into accountability on our lower time frame analysis to catch this scalp position. So now knowing that we are in this hourly bullish leg, we can seek to gather areas of interest where on the lower time frame we can look to be buyers at. Well, what I like to teach the CYPRX students, now that we have our hourly analysis, we can jump down to the 15-minute chart. From the 15-minute chart, we want to gather areas of interest where we could be potential buyers from based off a simple ideology that the banking institutions like to piggyback off of each other. That means that if Asia session bought from a low and London session bought from a low, if New York session is going to buy, they are most likely going to want to buy from these areas. Again, why? Because other bank and institutions bought from discounted areas here in this general vicinity. And that's just a simple basic understanding, right? Banking institutions are not going to want to buy high. They're going to want to buy low at a discount where previous banking institutions bought from in the past. So with that being said, one of the ways that we like to gather our areas of interest, again, this is just a simple overview of our strategy. This is not fine detail or anything like that. But what we like to do, we're looking to gather our area of interest where market makers flooded into the market, creating a higher low that led to a market break in structure. So here would be the first area during London session. Again, why? Because London session opens at about 7 a.m. London time. So if we change our charts to London UTC, right? London UTC, you guys can see 7 a.m. starts right here in this candlestick. And I can almost guarantee you that down on the lower time frame here in this area, maybe potentially on the 1 minute, we're going to see this pattern, which is a low engineered into the market, a liquidation of that low, a higher low or some type of higher low that comes after that liquidation move that sends price higher. On the lower time frame, what we're going to look to do is take and highlight that area, extending that over to the right-hand side. On the higher time frame, it's going to just look like this. Again, a higher low that comes in that takes market structure higher. So we'll highlight this area on the 15-minute from the candlestick bodies down to the wick. We'll extend that over to the right-hand side as a potential area of interest in the form of discount that we could potentially be buyers from. Why? Again, based off the ideology that we know New York session, if they're going to buy, are going to buy at a discount. They're not going to buy at a high. They're going to buy at a discount from where previous banking institutions, i.e. Asia banks and London banks, bought from. Now, let's just real fast confirm our area of interest by going down to the lower time frame and making sure that we can see this pattern in the market. So let's jump down to the 1 minute chart just to kind of further define this area of interest that we have set up. All right, and boom, you guys can again see the blue vertical line right here indicates London session. We know that London session opens at about 7 a.m. Well, check this out. Here is that pattern that I showed you guys. To further define our area of interest, look at this. What did I tell you guys the pattern that needs to happen? A low engineered into the market. Here's that low right here. Here's a wick of that low. It's a very tiny wick, but if you guys pay attention, this wick low right here came in at 166.824. This wick right here came in at 166.820. No one can argue with me that this candlestick low is lower than this one. Now, right after that, look at the formation that happens, a higher low. This next wick right here comes in at roughly 166.826. Look at the pattern I'm attempting to show you all. Boom, there's a low pre-engineered into the market, a wick of that low or a sweep of liquidity, and a higher low that comes in after that that takes price higher. This is our 15-minute area of interest that we gathered where the market makers flooded into the market during London session open at 7 a.m., driving price higher. And on the lower time frame, we have now confirmed that area of interest by the market maker pattern that, again, has to happen in order for market makers to take price higher. Look at this. It's the exact same pattern I just drew for you guys over here. A low, a wick of that low, a higher low that signals that the market makers are not interested in any lower areas of liquidity and instead are going to attempt to attack what? Highs, right? So with that being said, we further defined our area of interest on the lower time frame. You can even go ahead and highlight that higher low that came in after the sweep of liquidity there, further redefining your area of interest and saying to yourself now, which is what the majority of CYPRX traders were doing, jumping back to the 15-minute chart to gather that higher time frame confluence, that if the market comes down into this discounted area, again, which is where London session banking institutions were buying. We've generated that area of interest based off the 15-minute time frame where the market makers flooded into the market prior to the London session during the London Open, breaking all previous bearish market structure and creating a new swing high in the market. Redefining that on the lower time frame by seeing the institutional pattern that they must create in order to take price higher is going to take precedence in how we were able to capitalize on the move today. So pay attention, which is a low pre-engineered into the market, a sweep of that low, a higher low that comes in after that leads to a market break in structure. Pay attention. This is going to play an important role. So all we were simply doing to gather our higher time frame bias here at CYPRX was we were taking our fib, again, which is a tool that will help you determine where discounted or premium price is going to be. It is not a projection tool that's going to guess where price is going to go. That is not what it is for. It is a tool to help you measure visually where potential discounted price is going to be. So taking from this low, again, where London session bought from, which I've shown you all is exactly where they bought from based off of an institutionalized pattern that they must make to drive price higher and 15-minute structure, okay? From the low to the high, the swing high, and extending that over, you guys can see where we were buying from on higher time frame discount, right? 79% discount. You guys can see the market pulled back straight into roughly about 79%, which is that sweet spot. I like to tell you guys that the banking institutions, if they're going to piggyback off of another bank or another session, are most likely going to buy at a discount or sell at a premium from these levels, anywhere between 66 to 100% discount or 66 to 100% premium, depending on which way you're looking at it, as above, so below, right? So with that being said, now that we have our higher time frame confluence, think of everything that we've gone over so far. Don't get lost. Make sure that you're taking notes. We've generated that the hourly time frame was bullish based off the ideology that we were operating in what? This bullish leg. Remember, from the hourly time frame, we're operating inside of this bullish leg, right? So we want to be buyers as long as this low right here from Asia session holds, okay? We've now generated one area of interest where we could potentially be buyers from in the form of discount based off the ideology that banking institutions like to buy at a discount. And we know that London session bought from this area right at their session open, right? We extended that area after highlighting it over to the right-hand side. We've now confirmed that based off the 15-minute time frame, extending our Fibonacci from the low to the high and dragging that over, that we are now operating in a discounted environment based off of where London session bought from. Having all of that information, we can now scale down to the 5-minute chart and look at price action during New York session open. Now, let's clear up the charts a little bit. Let's get rid of some of these arrows. We have our highlighted area of interest here. We know that the banking institutions are going to want to be buying at a discount. But what we also go over here in the CYPRX community is the manipulation window. Now, again, I can't give you guys those specific times. That's reserved specifically for the CYPRX students. But what I can show you is a general area that shows you guys how lethal this strategy is when you really truly pay attention to detail. So this manipulation box that we attempt to avoid trading here at CYPRX is when the majority of the liquidity is set up during New York session. Why? Because impatient traders attempting to guess the directional move of New York session are trying to get in early. Right? We see early sellers above highs. And we also see early buyers beneath lows attempting to guess the direction of the market. Well, let me show you here how at CYPRX we trade against that based off of our analysis. Remember, at all times, this white box down here is what? our 15-minute area of interest that we gathered from over here during London session that we extended over to the right-hand side. We are attempting to be buyers based off the ideology that the hourly time frame in our current market bias opinion is bullish. Here at CYPRX, we attempt to trade with the higher time frame order flow. That's the hourly and above, right? With that being said, what I want you all to pay attention to is liquidity traps in the market. Well, right here, prior to when New York session breaks out of this manipulation window, what do we see? We see pre-engineered lows in the market. Well, think about the pattern that I showed you guys over here that needs to play out. We already have in mind that the higher time frame is bullish, and that is the direction we want to be trading in. Now, prior to the breakout of the manipulation window, we see a pre-engineered low in the market. Here at CYPRX, we do not trade unless a low is violated. We see a higher low come into fruition that leads to a higher high formation. Once this pattern comes into fruition here at CYPRX, that gives us the green light to take our Fibonacci from the higher low that was created after the sweep of liquidity to the high in the market and wait for price action to pull back to give us a solid risk to reward ratio to look for a 1-to-3 RR setup, right? So looking at this here, taking our fib from the low to the high that comes in after the sweep of liquidity and looking to get in at least a 70 to 79% discount to take price higher, look at how we were all able to capitalize on this market move here in the CYPRX community. It is literally insane when you really see it come into fruition, right? Now, also, of course, obviously tying into the fact that the students know the manipulation window in particular, but being able to identify liquidity is crucial in the market, right? If you are unable to identify liquidity in this market, then most likely you are the weak hands. You are the person that the market makers are attempting to liquidate in this market. So here you guys can see, not only that, but we also have a major psychological level playing a key role in this trade setup today. Paying attention to detail, we see the market makers break out of the manipulation window and immediately come and hunt all the early buyers that were flooding the market, attempting to guess market direction, chasing these bullish candlesticks on the 5-minute time frame prior to the market breaking out of the manipulation window. Here at CYPRX, we wait, we sit on our hands, and we laugh at all of those retail investors. Now, jumping down to the lower time frame, this is where we're going to start to pay attention to detail. Remember, at all times, keep in mind, this is that higher time frame discount, and we are operating in 79% on the 15-minute chart discount from where previous banking institutions during London session bought from here in this area, driving price to these highs at the 168, right? Keep all of that in mind because that plays an important role, always trading in tandem with the higher time frame, right? So now we are on the 1-minute chart. Look at how this price action plays out. Here are the early session buyers of New York. And what do we see? We see equal lows right above a major psychological level. Does that not look very suspicious to anybody else? I'm just saying, it's kind of common sense. You see a liquidity trap in the form of retail patterns right above a major psychological level. Considering the fact that the manipulation window has not been broken out of yet, all we had to do here at CYPRX was identify those equal lows, wait for them to get tapped, and wait for the institutionalized pattern to play out. Well, here's that institutionalized pattern right here. What do you see? A low in the market that gets set, a violation of that low, a failure swing low after that, and instead, what does the market print? A higher high formation. Do you guys see right here the market maker pattern? Here is a low pre-engineered into the market. Here is a violation of that low, and here is a market break in structure. Look at the pattern that I drew over here for you guys. Again, what do we see? A low, a violation of that low, and a higher low that comes into fruition after that. Boom. Well, as soon as we saw that market maker pattern, all we simply did after identifying this market break in structure was we took our Fibonacci from the low to the high, and you guys can see that majority of us here at CYPRX were entering at about 70 to 79% discount from this pullback here after the market showed us a willingness to move higher. Now, let's talk about logic for just 1 second, okay? I really want you all, anybody that's listening, to really take into consideration what I'm attempting to teach you all here and what we are attempting to go over in the form of technical analysis superiority here at CYPRX, okay? Think about this logically, all right? How were we able, again, it's not just myself, it's the majority of the traders here at CYPRX that trade GBP/JPY all caught the same move. How were we able to determine, logically speaking, that this market was not going to go down any further? That plays an important role in our analysis as well. So if you're still here listening, pay attention. This is extremely important. Logically speaking, how did we know that this was a manipulative move? Aside from knowing the manipulation window exists, how were we able to determine that the market was going to reverse here? Not only paying attention to market maker patterns that they've made in the past, again, they made that same pattern here. They swept a low, higher low came in after, and they sent price higher. Same thing they did here. They set up a low, they liquidated that low, breaking previous market structure in the form of a new swing high, pulled price action back into discount, and sent price higher, given the definition of bullish order flow, which is generating higher highs and higher lows in the market, right? But paying attention to detail. Let's think about this logically, okay? We see a low in the market, okay, that generates equal lows here and here, right? Now, look at this low, this swing low in the market. We see a lower low, lower high, lower low formation. After that, we see another lower high come into the market and another lower low. This is where it gets interesting, because after this price action forms, this is how you can tell that this entire move down was a manipulative tactic to, again, entice more retail money to chase the market. How can you tell that this was a manipulative tactic? As soon as we broke out of the manipulation window, we failed to create new swing lows and lower highs in the market. Again, at a major psychological level, the 167.00, which again is not a supportive region. It's not support resistance. The banking institutions like to buy or sell from these round figure psychological levels because they look better on their balance sheets. Do you understand? Okay. Instead of making lower high, lower low formations and breaking a major psychological level, the market instead did what? It swept a low, again, liquidating all these pre-engineered lows in the market, or these early buyers prior to the New York session that existed underneath of these areas. You can imagine, right? Think about this, right? Think about a retail trading pattern, double bottom formation right here, boom, boom, double bottom, right? So what most likely exists here? Early buyers chasing retail patterns, right? Prior to the meat of the New York session, they're attempting to buy all of this price action with stop losses beneath this low, okay? Then on the flip side, we also have people with sell stops that are looking for a market continuational move down, looking to sell with the stop loss above highs if price breaks these lows. You have two types of orders here. The market makers know that. They manipulate price down into those levels, activate those sell stops, liquidate those early buyers, and then they reverse price. How do they show you that? They reject major psychological levels, break previous market structure lower highs, and create new swing highs in the market, and then they give you a signal. By pulling price action back into discount, again, taking our Fibonacci after this price action plays out, which is a market maker pattern, liquidating a low, a break in market structure, and a higher low that comes in after that. Here at CYPRX, all we simply did was we waited for that price action to come into fruition, again, based off the ideology that the banking institutions, let's delete some of these arrows. I hate when it gets this cluttered, okay? Off the ideology that the banking institutions are going to buy at a discount from where London session bought from, right? They're not going to want to buy all the way up here. They're going to want to buy down at a low. And we've already predetermined that this was the London session low that came into fruition prior to the London session, where they drove price higher, right? And you guys can see they came back into that area of discount, the 16700 psychological level. Now that is not confirmation. All we needed to wait for was a break of structure for confirmation. We got that break in structure. We took our Fibonacci from the low to the high. We waited patiently for price to come back down into 70% discount. I placed my stop loss firmly below the major psychological level. Why? Let's just think about that logically real fast. Again, if you're still here, smash that thumbs up button and consider learning more in depth about our strategy here at CYPRX. This is just scratching the surface. Again, over 60 hours of course material in our private mentorship program and full analysis breakdown sent to the students ahead of the curve. That link is in the description down below. But think about this, okay? Why did I place my stop loss beneath the low? Every single thing that you do in the market needs to have a reason. Well, logically speaking, if the market was going to dump lower, what would it need to do? It would need to break this low right here underneath of the psychological level. So in order to invalidate my thesis that the market was going to go higher at the time of myself entering into this position, that is why I placed my stop loss beneath this low, which gave me a sound risk to reward ratio. And the majority of us here at CYPRX, if we zoom out, we're targeting, again, the early sellers above these highs, which also form, same double bottom formation here, as above, so below, formed a double top formation at these highs or equal highs, whichever way you want to look at it. We can imagine retail traders, again, trying to guess the direction of New York session. We're selling here, right? With stop loss positions above these highs. And then we also have to turn that around as above, so below, people who are willing to buy above these highs in the form of buy stops, where they're looking to get entered into the market if price action goes higher. Do you guys see how the liquidity is set up in the market? Hopefully, after watching this video breakdown, you have showing you guys proof is in the pudding. Multiple CYPRX students across the board utilizing our strategy efficiently and effectively. I mean, Amir Casper, for example, whom we have an interview coming up with, $413 in one day. That's absolutely phenomenal. That's somebody's minimum wage weekly salary right there. Okay. With that being said, as always, ladies and gentlemen, make sure that you're doing your research. Make sure that you're tapping into a private mentorship program that's going to drive your focus, your knowledge curve a step further in this market. As always, many blessings to you all. Again, make sure that if you want any access to our private mentorship program and you have questions, you email us. That link is in the description down below. As always, I will see you guys in the next video breakdown.